Good morning, everybody. Well, May seems to have opened on a negative note for our markets, with both the days posting negative closes for Nifty Future. This is the daily chart, which shows that over last 2 days the index have slipped quite a bit from the highs of 5301. The nascent short-term uptrend is now reversed on the downside, and all eyes back on the support range of 51505175, which has been holding the index for quite some time. We maintain our view that this choppiness is very likely to continue for the markets as long as the levels of 5150 on the downside is not taken out. Let's look into a slightly shorter time frame for Nifty Future. This is the hourly charts, which clearly shows that the index has broken down the rising channel and is actually inching close to these lows of 5150, 5165. Multiple times we have seen that this range has provided support for the index. A look at the momentum indicators in the same time frame and the trend indicators also suggest that there is still room on the downside left. And as I record this video looking into the SGX Nifty down over 30 points, we are looking at another gap down for the day. The key thing to watch out would be whether these supports hold or not. We expect that from a short-term point of view, these supports can hold, considering that it will be the third successive negative day for the Nifty. However, a confident break below 5150 can actually lead to significant downsides for the rest of the month ahead. We look into the stocks which led yesterday's fall, and we found many large cap banking stocks. So let's look at the bank Nifty chart, and as we can see that the index fell over a 1.5% in yesterday's trade, and this index as well is back to its support close to that 10,044, 10,000 levels where we have an erstwhile rising gap. The underlying trend of Bank Nifty is still down, and the break below 10,000 will mean significant downsides for the index. So a breakdown for Nifty below 5150 will automatically come as a breakdown from Bank Nifty below 10,000, and the successive downfall, we sense that the banking stocks can lead all the way for the Nifty. Few banks which are weak and one can look to short on the downside are Axis Bank, State Bank of India amongst the large cap names, and ICICI Bank as well, which has failed to hold on to its uptrend. Look a bit into the stocks which held in yesterday's trade, and we see that the strength stays with the relatively stronger stocks like a TCS, a Hindustan Lever, an Infosys, which has bounced back fairly well, and we sense that the bounce back is about to get over very soon. DLF within the realty, Jindal Steel and Bharti. Amongst these names, we find that these relatively stronger stocks like TCS, Hindustan Lever, HDFC Bank will continue to do good, whereas the other ones which are showing fresh strength like Kane or a Sessagoa might surprise on the upside if Nifty manages to hold the supports of 5150. Amongst the losing stocks, Maruti was one stock which crashed quite sharply in the last 3 days, and it's back to the channel border. We sense that over next couple of days this sell-off should ease off and should see some short-term bounce back. Hero MotoGood fell with a very sharp gap down and down over 7.5%. And then there's the likes of an Axis Bank, which we mentioned, and Bank of Baroda within the banking space, which have gone into a downtrend across all time frames. The auto stocks, the banking stocks, the interest sensitive space seems to be taking a beating in the market, and we sense that a break of 5150 can lead to significant downsides for this interest and sensitive space as well. Looking a bit outside our markets, a look into the dollar rupee pair, which have nicely trended up for quite some time and is back to its last year December's high, the dollar high of 53.47. So the rupee continues to depreciate over time, and looking into the RSI indicator, which is just inching close to its overbought territory, we seem that this rally might continue a little further for the USD INR pair. So yes, for the Nifty, Looking into the gap down that we are likely to open for the day, the key point to watch out would be whether the support range of 5150, 5175 holds or not. On the upside, as long as 5250 is not taken out, we sense that the selling pressure is likely to persist. Thank you, and you have a great day of trading. Trade well.